Alright, so this is my end of day recap for Wednesday. There was FOMC today. Did nothing, but which I don't trade on FOMC days, so I didn't even care to taper. I did wake up really still. I did check it, did my analysis on what I want to see, but I didn't really care to taper it. Instead, I studied mainly. Um, but so here's the bias going into today. Um, so yeah, we've seen obviously NQ expand higher. We credit some here with YM, even though it was pretty shit. Expand higher and reached range the draw liquidity rate or prime ranges, which is a bunch of feather swings here. ES as well. Took those highs out, and we credit SMT with those highs with YM, right? Kind of created strange switch second stage SMT here, but formed here. So ideally that held, but we decided to resweep that, so this is lower probability SMT. Not the cleanest sequence, but we do end up displacing away from it. And ES on Tuesday, being C3, reached the drawn liquidity and created SMT with NQ. And we know this is likely full SMT because what it allows us to do at the initial reversal, they all V-shape, they all reverse lower. So that typically means that they're going to reach the same drawn liquidity. And whereas this SMT being printed on the lagging asset being NQ, which is his SMT break with YM on ES, it's in discount, right? Low T. So it's like when we create this SMT, price is creating a feather swing with that SMT low. So that's lower probability SMT. We want to see space out SMT if it's going to be prominent. So yeah, I want to trade NQ as a lagging asset in continuation to break this SMT, right? So the framework is still order pairing or manipulation ranges, right? We're going to manipulate range high to reach for range low, and the profile would be Tuesday high of the week or Monday high of the week. Right, and we got that small wick Tuesday C3, and then looking for Wednesday C4. And when we expand lower like this, like this is also how you know price is probably going to reach a low, because if this week was going to continue from the previous week's range, then ideally we respect EQ, right? And very clearly, the refined key level being this gap here, there's a small gap. That's a refined key level, the closest daily level to the new weekly can open that should have supported price and formed below the week if we're going to continue, right? Be bullish. But we clearly displaced through that, indicating that price wants to reach for previous low, or beyond. So my bias is bearish going into tomorrow. That's my main plan, and I'm going to stick to that plan, right, as best as possible. So if Wednesday is going to create C4 continuation, what do I want to see, right? I want to see price respect EQ pre-range. I want to see the wick of C4 be in respect of the lower half of this range, and then ideally today opens higher and then expands lower, right? Simply. So let's jump into the 4-hour to refine the key level. Asia looked like shit because there was like no refined key level. I mean, if we mark out EQ, pre-range, high to low, the closest level on the 4-hour, which if it's going to be the 4-hour, it's probably going to be a gap. So it would be this gap here or this gap on ES. So we're not opening up near the refined key level, so Asia expansion is probably not valid, right? But we do have a relevant swing here. The space between, or yeah, between this high and this high makes this a relevant swing. So possibly, if we show reversal signatures away from this high, you know, Tuesday SMT, displacement away, etc., then this could be the potential key level that price could, you know, form the higher day away from. If not this, then it's going to be the 4-hour gap rate. Not sure if we actually open higher or down. But also, I want to talk about the SMT on the daily. So we formed that SMT here, and also what do we have, right? Within C2, C3. What do we have for the phasor price? Or we got that V shape, right? That's exactly what you want to see. So we got that displacement. So that's good to see. And ES being the weakest asset, reached the draw liquidity first over NQ, being this low. And work out that same low, which is right here. We created that SMT right here. And very clearly, this was SMT break with YM, because YM, this is the 6th of August, 10 a.m. Yeah, that's way over here. It's like this low here. We've been below it though forever since last week. So yeah, I mean, this SMD break with YM, and if this is going to be middle asset SMD break into expansion logic where YM being the leading asset, the weakest asset, creates SMD with this low, ES breaks the SMT, and then NQ being the lagging asset or the strongest asset, is holding the SMT, which was around EQ at the time. So it's pretty spaced out in a way. I would want to see all assets V-shape away from that, right? Immediately after creating the SMD break. Because when price creates SMD break, that's when we can reverse. But very clearly the leading asset is fell into mid plate yesterday. So I'm assuming tomorrow, Tuesday, can resync and catch up to ES to make the same low, right? So so that's essentially my narrative for what I want to see tomorrow. Or today, I guess, on Tuesday. Or Wednesday. So today opens, the daily profile was ass. We kind of opened lower at first, take pretty low. And again, we're just leaving further strings with the draw liquidity. So we know any movement higher, right, from that's opposing to the bias, the draw liquidity, is likely retracement. What's going to cap out that retracement at key level? Not sure if we hit that whenever the swing. I don't think we did. I don't know. So Asia did absolutely nothing. Then let's go prior to the driver. I want to say I kind of forgot what price did today because like I said, I barely tapered it. Let's see. It's 8 a.m. There was I think news at 8:30. I forgot what it was. But it was on Forex Factory, so I don't know. But we clearly, it looks like this is what I was like. Oh, this is because like I said, my bias is bearish. So I'm automatically assuming this is a retracement, but it's looking like price is like V-shaping higher, reversing higher, and I was just like thinking like, damn, that looks like it's FOMC day. And I was like, damn, that's gonna trap so many people. They're gonna think that this is like the reversal higher. This is gonna be the low of this trend, and we're gonna start heading higher towards these highs or some shit because it looks strong, really. But what is price still doing? All right, what is price doing? It's still respecting the EQ pre-range, right? So in reality, we're still bearish. The bias is still bearish, but we've seen ES created SMT fill with this high here. Yeah, I don't think there was any two stage or it's high demand strength switching at the reversal, right? But yeah, we created SMT fill with this high. I don't know what YM's doing. YM is, yeah, YM was stuck in a consolidation, and this is pretty high. So we take pretty high here, which is way up here. So we also have SMT with pretty high, kind of like advanced premium to discount away. So yeah, and so we have that SMT with the refined key level. So we want to see the price hits a key level, price SMT. We want to see a swing point. We want to see price displace away from that to confirm the key level, the framework, the reversal, right? We don't want to see price monkey around, stay consolidating at that key level, because that wouldn't be a problem level at that point. It's also the refined level, so I really want to see that. So 830 hits that high, creates that SMT. Again, there's no string switching at all via PSP, swing point SMT, unless NQ took this high out here. at 8, 9 a.m. than there would be, but there's not. Maybe it's swing high S&P. Nope, we just displaced lower on all mainly NQ. Again, no two-stage or swing switch. And I like this displacement. This is really strong at 9:30, right? I mean, it makes sense why we did this, right? We hit the key level with S&T prior to the driver. We just don't got real like confirmation and for what I demand via S&P sequences at the reversal for me to actually engage with this price. But we hit a key level with S&T, being the refined key level that I went from the high day away from prior to the driver. So what should the driver do? We should expand away from that to confirm the high day. Exactly what it does. And then price takes current day low. And like I said, this daily profile looks it looks like seek and destroy at this point. Just like we open lower, take these lows out, open higher, head lower again, head higher again, seek and destroy. Really. I mean, you could say it's more of like an open high because realistically, this open low is pretty. It wasn't large, and it didn't engage with any prominent level. So we know this is an established low day, obviously. But it is realistically seek and destroy, so I don't like that data profile. Ideally, it's open high, right? If it's for a high probability day, the fact that it's not makes it super shitty. And then, but I like this displacement. I mean, this confirms a reversal. Possibly I can see a continuation. It's now 10 a.m. open. We're not opening up with an aligned swing, so what does 10 a.m. have to do? Create an aligned swing, which it has to create the refined level at that point, being this gap. What is this? The universal sequence. And I was thinking possibly we could form a second stage PSPSB failure, but what is and why I'm doing? This is why this is so shitty. What is why I'm doing, right? While NQ is expanding lower, YM is consolidating, filling in with this S&P, kind of expanding higher, while NQ is expanding lower. Decoupled PA, and that is shit. Right? I really don't like it when price is decoupled because I lose when it is. Even when NQ can be super clean and my model could be presented to me, it could be A plus. It's still lower probability because line is being decoupled. It's not in sync. When prices are out of sync, that they're manipulating. So you really gotta wait for a new phase of price. How is that gonna form? VS is gonna price has to hit a key level and also ideally create strength switching, right? And then ES as well is just consolidating and not doing shit. It's kind of respecting this gap here. Should have displaced lower with NQ away from the SMT. So it's only NQ that's really displacing lower. So it's making me believe that this might actually be fake, but it's still aligned with my bias, and we're just leaving fillers into the wrong liquidity. So, yeah, I don't like this. So I really want to see something on these assets if I would further trade this. Right now, I don't even care if we create this second stage PCB fall. I would not take it because of how this looks, unless YM, maybe this asset doesn't trade into the high miraculously. If it doesn't do that, while YM does trade into this high, creates that second stage PCB fill with NQ, but also we sweep out this high, right? If we hit a key level, create a swing point, and we don't initially expand away from that swing point, then we give it two chances, right? Price would has to resweep that high, the original high, that price that engaged with the kilowatt first, and reverse away from it. Has to do that. So, does it do it though? Right, it does, but NQ doesn't. It trades into the gap, so there's no S&T. I mean, I don't care about this advanced premium to discount. Essentially, I mean, this pretty much is. I don't really care about it. So, and then ES is well expanded higher with one. But again, am I gonna trade ES, let's say, as the middle asset to catch up to break the S&T with pretty high, which is right here? No. Why? Because my bias is still bearish. We're still bearish on NQ. So I wouldn't really care to trade asset secure. Yeah, so we're not really getting confirmation trade NQ as the lagging ascent continuation essentially. This is also the string switch too, right? But one thing that I actually started thinking about when I was backtesting earlier is I was asking myself, if we have a hard time for mass sync like we do here, and let's say price hits the refined killer with a from the hive day, and let's say it's not a string switch, it doesn't matter if it is or not. It's better if it is, obviously. Let's say it's not, and let's say we don't form string switch at the reversal. So let's say I don't trade that, so I demand displacement away. We got that here. Do I need to demand string switching with the gap? I mean, ideally you see it, but do I really need to see it? Because technically, this SMT here is a new reversal, even though we have hard time for mass sync. And this is like the universal sequence of the 4 hour. And that's literally, that answers my question right there pretty much. Because technically, this is a new reversal, a fresh reversal. So I'm technically trading NQ as the leading asset in continuation away from this gap, right? Pretty much. So, so what I demand at that point, if I'm going to trade the leading asset in continuation away from the universal sequence, is second stage PSP as we fill, which is the continuation PSP, or string switch second stage PSP. One of those two. But if it's async, I demand all string switch forms. It could be with the killable PSP, string level, whatever, smart. Or any form of string switch really, as long as it's clean and price of EJ away from the cleaning. But I'm trying to, yeah, I want to really stick to those rules too. I really do. I don't want to, because it really helps me to understand what I need to demand instead of having all SMT sequences, available for me to capitalize on, whatever the fuck. It just makes it super confusing, and yeah, it's hard for me to trust it at that point. So I really demand high probability sequences, but which causes me to miss stuff. Yeah, but I don't know. I'll figure it out in the future. But that is not. Right now though, it's really not doing me any. It's not really. I feel like I don't get many opportunities, honestly, man. But when I do, I get enough, I guess. But it's like when price is actually crystal clear and clean, and it doesn't provide those specific SMD sequences that I demand, I will miss it, even though price is high probability. You know, maybe the daily profile is clean, phase of price, you know, draw liquidity is clean, but I will still miss it because I demand specific sequences while everybody else, or a lot of other, like a lot of people, I'm sure other people demand specific SMD sequences like me, but a lot of people just use everything and they'll actually be able to capitalize on it. But do they? I really need to study that. I really do. Anyways, yeah. So right now, this is looking like full SMT, obviously, because YM being the lead asset is clearly failing to manipulate it. We're consolidating, retracing, displacing through it. ES is wanting to catch up. So is this gap really going to hold? Doesn't really seem high probability because we really want to see, especially on these assets, the ones that are the assets that are in premium, while NQ's in discount, we really want to see these assets switch strength, switch bearishly to catch up to NQ. They're really not showing any willingness to want to do so. So possibly this could be a counter trend trade to trade ES as the middle asset in continuation as sync to catch up to Y and to break this SSB. But like I said, it is counter trend, so it's automatically lower probability. But I really don't think it's that clean, to be honest. You can say the daily profile is more of an open low. Like, I don't really care about the draw liquidity too much, but still. Then we have Tinium here. So what do we do prior to Tinium? This is, well, technically we created SMT with these lows, kind of like advanced premium discount while this asset's in like EQ, the current day range within this gap. NQ is below current day low, below the range low. Then we create C2 away from that. Prior to titanium, so titanium, that's the GXT continuation sequence, so titanium should ideally open up. If it's going to be bullish and continue from the previous forecast range, should respect EQ, what's refined level. It's EQ this way pretty much. Because I wouldn't want to see titanium come all the way down here to reset this low. That would be a large wick. So ideally we just continue. Just place higher, create new gaps to continue from, whatever. But we end up creating S&P fill right now with NQ, which you might think that is a string switch for ES, confirmation to axis sync for ES to catch up and break this and meet the highs, to confirm the universal sequence, whatever the fuck. But it's not prominent string switching. Why? And I've learned this recently. I had to study this for a while just to truly carve it into my mind, to truly understand it, to believe it. I remember JXC talking about this. I don't know what video it was. It was one of his like trade recaps. But yeah, this is technically a string switch, right, on ES. But ideally it forms with YM. Why? Because YM is the asset that's in premium. We want to see this asset momentarily switch stronger because it's weak right now, right? We want to see it momentarily switch stronger, which it technically is. But we want to see this asset that's momentarily stronger switch, or that is stronger, momentarily switch weaker. Right? That would be a true string switch. But we don't get that with YM. So this is not prominent string switching. And I remember I texted someone in Discord. They talked about it, saying that, oh, but GXC doesn't require string switching when the leading asset fails to manipulate the draw on liquidity, which that doesn't make sense, because that's just one thing that you look for. That's one thing you want to demand on the leading asset. If we're trading async, if the leading asset trades into the draw on liquidity, that's when we start looking for string switching. What do we want to see though? The leading asset failed to manipulate the draw on liquidity, and the lagging asset momentarily switch, or stronger in this case, or just show string switching, to indicate, to confirm async. So that's just a thing that you need to demand, right? Just because the leading asset shows a failure to manipulate signature doesn't mean that we don't demand string switching. We don't need to demand string switching. That's not how it works. Unless GXT stopped doing that. But I don't think he did, because that's exactly how he taught it. So, but yeah, we do show string switching, but it's not valid string switching. So it's not a valid asset sync trade. But it does end up expanding away from it. Right. And is everything aligned? Right. Let's make sure this is actually up. The daily is aligned, right? Small wick, even though the profile supports. The 4 hours aligned during 10 a.m. That small wick. The 1 hour 30 minutes aligned. We create this string switch here. It's like, even if like, because beforehand, YM was clearly showing a failure to manipulate this high in sidebar consolidation, right? All assets, like these assets, are falling to displace lower from S&P, so it's full S&P. And what did all assets do at the reversal? They all V-shaped higher. The S&P is being predicted by OT, so it's likely full S&P, whatever. But again, I don't really care for that, right? This is kind of like an invalidation towards my bearish bias. Am I going to capitalize on this as a counter trade? Not really, because it's lower probability. It's a counter trade, and it's FOMC day, and it's not a prominent string switch. If it was a prominent string switch, let's say it was, let's say YM actually did create the S&P fill, and whatever, would I have taken it? No, because I don't trade FOMC. As simple as that, really. But if it wasn't FOMC day, would I have taken it? And I feel like I wouldn't have, because I don't like going against the trend. I really want to be super disciplined with that. I think that's a good thing to master. because it shows. I mean, in reality, yeah, my model's here. Everything aligns for sync at that point. But like I said, it's counter trend trade, and I really feel like it's a missed opportunity because I'm demanding, because you can say the bias was invalidated when or YM and ES trade into the refined Q level, and they clearly showed a filter in the plate, so that's an invalidation to the bearish bias. But price is so decoupled, especially on NQ, right? Like, if anything, I would want to see NQ switch shrink bullishly. Like, if we did this here, or whatever. I want to see this asset then at that point switch shrink to catch up. Right now, though, like right when we create that S&P fill, which was technically right here at 10 like I'm not automatically assuming that we should be bullish because very clearly we're bearish on NQ. My bias is bearish. So why would I assume that this shrink switch here? Why would I even if we showed it for limit whatever? Yeah, because I guess we did fail to respect the bias on ES and YM prior to 10 a.m. So you may assume that okay, that invalidates trading bearishly on NQ because price is decoupled, whatever. So I'm not going to short this. But it could have been valid. It could have been valid. It really could have. Like I said with YM, if we created this gap and then we took out this high and created that second stage PSPS and we fell here on NQ, it could have been valid, like I said beforehand. Right, let me show that. Right, if NQ took out this high and created that SMT with this high pretty much here like that. If we did that, which is likely not going to happen, but if we did do that, then it could have been valid, right? And then you would want to see all assets ideally V-shaped strongly away from that. Then the bias is still bearish. But my bias is still bearish going into 10 a.m. On NQ. I'm more favoring NQ, so I don't give a fuck about what YM and ES is doing, even though they're pretty much invalid in the bias by failing to reverse away from the refined kilo, whatever. So I just don't really care to engage with this price action, even if we did form that string switch to confirm sync. I think that makes sense. So, yeah. Oh yeah, we do get that, which you could say is a form of string switching, but it's not high probability because it didn't form with the lead asset. You want the lagging asset to form string switching with the lead asset, not the lagging assets together forming string switching. Because that's not a proper string switching you want, because this asset should be momentarily switching stronger. I've already talked about it, doesn't matter. Anyways, so do we V-shape away from this cleanly? Let's I think let's look here, I'm pretty sure. Alright, we create that as here. No, we really don't. I guess not 3 we do. It's not that. So it's like right when we create that string switch, we're right here. We can instantly, if it is a problem string switch, which it's not, but if we were to take this, we instantly drop down to the lower time frame, 5-3 minute, and demand that V-shape away. That V-shape away from that SMT is what confirms the reversal, the SMT. Not the S&P itself or the swing point. We're going to see that phase price confirm it. And then entry right there, stop the rejection block, and then shoot for a 2R. Honestly, I would probably just shoot for a 2R. But in reality, a 3R was achievable because it's not the major liquidity. So, how do we get there? Let's see if it's clear. So we chop for a little bit. And right when we put the CICC, this is why it's like, even though it's shitty, like let's say it was a valid asset trade, because let's say this string switch was valid. Let's say it did form between YM and EOS. But we know this is counter trend, so it's lower probability. But even if some would say this is like an eval trade, scratch, like a trade that really doesn't matter if it loses, whatever. Maybe you're entering with half risk, or maybe you just don't care about if you lose, whatever. Even though it's shitty, price does still provide that CICST to allow you which, ideally we trace into this range at EQ, then we create the CICC. This is valid to mechanically reduce your risk by half at least. And then, you know, maybe this is a possible area for you to pyramid, right? If you really wanted to. I wouldn't do that on the straight ups. I don't pyramid on it. I just learned that from GXC. But then we have this nice expansion away. It's not looking bad. So we already know this could possibly, we're probably going to reach this high, at least this high. That's why, like, I feel like the daily pretty high. I mean, you could say it's a prominent draw on liquidity. I think what defines a prominent draw on liquidity is close proximity, key levels, like draw on liquidity. You could say this is close proximity. Yeah, it is really, but I don't think it's the most like prominent. Even though it is pretty high, I don't really count it as really like a prominent draw on liquidity. Not the most highest probability draw on liquidity for sure of all time, but like I think that just shooting for a 2R, because to reach for the side would be the best thing you could do. Because like I said, there's no guarantee that price is going to reach the side, even if that is the actual high that line felt into play. And now we have a CICSD above our entry, so we can trail our stop to break even. 2R got hit, easy. 3R, let's see. Okay, we might need to run this low out. Which might be a 30-minute, 50-minute gap or whatever. Let's see. 50-minute gap. 30-minute gap as well, pretty much. SMT fill. And look at YM. Oh wait, that's around the same time. Okay. I guess that's fine. But yeah, we got SMT fill. Maybe that holds. Thank you. Doesn't hold, but still got that. So we want to see price V-shape away from that key level. Or in, you know, if we were shooting for the major on liquidity, this is what I'm talking about. You have to deal with that shit. When in reality, you could have just shot for a fixed R or 2R and you would have been done with the day. You wouldn't have to hold through that, and you never know what price can do. Right? You can't control it. I mean, it could easily come back, take you out, and then possibly run higher again. It's FOMC day. I'm just saying. It's that shit could easily happen. So, what does it do though? It comes super close to your entry. That's when I would trail my stop this low, and then the rejection line. Once we create this CICST, not immediately I would trail, but once we display something, maybe create this gap, I would definitely trail myself this low. And once we get to this point here, I would probably just trail here. Even though it's not really, it doesn't matter. Oh, yeah, we're not gonna get, we're not gonna make it. Yeah, exactly. So, yeah, that's why, like, on lower probability days like these, especially, you would want to just shoot for a 2R. Don't demand too much. It's really not smart, but because like I said, who knows? Like, why this? Like I said, this high is not really too prominent. It's really not that crazy. Like, it's not from the same, but it's not a clean draw on liquidity. Like you know when a draw on liquidity is likely going to get hit. When it's like the odds of it not hitting is like 20%. Like it's likely, like it's most likely gonna hit it. Here though, I don't know. It's like maybe it's like 50-50, right? I don't know. So I might as well shoot for fixed R just to guarantee that when I don't know what we do here. I checked FOMC. I'll talk about that real quick, I guess. To see if FOMC could be clean, because in reality, NQ is still respecting the bearish bias. We could possibly reach for this low, but again, sticking short profile, I didn't like that. Realistically, just avoid today. It really doesn't matter. It's honestly hard to tell what we're gonna do. So we just held an S&P and yeah, we're just consolidating, right? Thought we could just switch. I think we did. Forget about this ST. It goes with NQ, I'm pretty sure. We take out this high here. Forget about that ST. And then we create a string switch, second stage ST via some high. What it all has to do, they V-shape in a way, very lethargically in a way, but they do V-shape, create a gap. So this is the universal sequence, so this one confirms SMT. So possibly we continue from that, but again, we're just consolidating on NQ. How do we know this is going to hold? It's lower probability for sure. Assume the yes. I mean, come on. I mean, you could say, I don't know. I should, but especially since we're felt the break SMT or it's just kind of shitty, but we have prior to 2 p.m. So we I was thinking maybe we could do this here. Create a second stage PSP SMB fill here. To confirm the universal sequence, which is what I demand if I'm gonna trade the lead asset, which is technically NQ, right? But we didn't get that. YM edge those highs, just created feather swings. Can't really count that as SMT, so. Then 1 p.m. on the hourly, created a gap on the hourly, right? Exactly. Right here, which is a PSP, continuation PSP. So possibly we get it that high. We don't. Going at 2 p.m. we just all assets from that gap. So you can see. So yeah, I don't care to engage with this price anyways, it's whatever. That would be technically framework on the 4 order pair or manipulation ranges, right? And we technically have string switch second stages MTU within that key level, if you want to say. Yes, and then Q. Right. And all has to displace away, which you can say confirms the hive day. So we're yeah, this way looks it's just his ass. So I don't know when that, yeah, 10 p.m. pretty much going to 12 from that SMT, right? Pretty much. It's kind of weird. But assuming this is just ask, we create C2 and then we do that during time and C2 bullishly, so we follow the experiment from this point. But when we look within this PA, we technically do have a reversal. String for second stage of T displacement away at 12. So GXT alliance sequence, right? We're just if this is gonna be the high of the 12. If this is gonna be the high of day, the high of the 6 AM or 6 AM 6 hour candle, whatever. And this gap has to hold, obviously. We want to see price continue from this range. As we have reversal and continuation. And if I was going to trade any asset, it was probably going to be YM because of the daily profile. It's kind of like delayed. Or we kind of, you can count, or not delayed, it's more of an open high. You can say that's an open low, but we don't engage with any key level really. Just leave equal low, so this is unestablished low today. Small move below the daily open really doesn't matter. It's more of an open high. Obviously, we have a large wick beyond the daily open, so since we open higher at first, the daily profile supports trading the daily candle. If we actually did form that hourly second stage PSP here at 2 p.m. and V-shaped away cleanly on the 5 and 3 minute, then that would confirm the universal sequence to trade continuation. Target these current day low pretty much. They went out 30 minute. You can see the 4 hour and YM supports, 6 hour supports. Right. Oh, it says supports. Definitely not in Q. Yeah, that's one. So all time frames align with our alignment expansion, and we have confirmation for continuation. So you could say it would have been valid at that point. But because I mean we're still line bearish, we still are respecting EQ pre-range, we're still bearish, but um, this is S&P falling the daily as well. But yeah, just really shit. Yeah, I don't know. Anyways, we didn't do shit today, so. Last video probably. Yeah. So I'm gonna end the video now.